Welcome to Candlestick Cash Radar and welcome to quarter two. We are looking at S&P at a minus almost 6% for the last month and everything down. It's been a terrible month. Well, energy's up 3%, but really bad, especially technology and consumer discretionary, which often go together. So yeah, it's been a really rough month. Has been in the market in general. And it has been for me. It's not been very nice. So probably the best course of business is just to be inactive. Maybe keep your cash on the side and just don't do anything. Just watch it. Especially we have Liberation Day coming up tomorrow on April 2nd. So we generally do this on Monday night, but this is Tuesday night because I didn't have a good sense of the week last night. And we really don't know until, Liberation Day is going to tell us maybe some more, but it's just a rough week. Probably stay out of the markets unless you're feeling very cocky. All right, so let's look at our indices here. We're going to start with, as always, the Dow. So let's go to the Dow here. And yesterday we had the piercing candle. It closed over halfway up there, but didn't get into the window, the previous rising window that had been filled and come under. But yeah, today was an inside day. You had some lower shadow, but actually a strong close at the same exact spot as yesterday. So that's fine. You have the piercing and you're right under the 20. 20's under the 50, so it's still in a downtrend, but not a, you're kind of getting into the squeeze. This is our third red dot here, so yep, not sure what to say about the market just yet, but we did put in a higher low. You can see that. That's your Dow, and then the NASDAQ. After having a meeting line, you had a positive day today. Again, a strong close in the market. After barely closing above the large Darvis level here, we did have a higher close today, up 81 points. So NASDAQ was the strongest because the Dow actually closed down 7 points. NASDAQ up 81, SPY up 28. Let's look at the SPY. Wasn't quite a piercing yesterday, but you held your Darvis and you had a higher close today. So again, 20 under the 50, and so it is not really great, but you still have a crossover with the MACD and 4 or 5 red dots. So you're kind of squeezing on the market. I don't. Again, I would just kind of wait on the sidelines, but I'll show you a couple things that I find interesting. Yep, it's the same one as always, CVS. It hasn't gone anywhere too much. Maybe it's drifted up a little bit higher since I've been looking at this for, is this the third week that I've been looking at this one, recommending it? It has drifted higher. It's been a tough market for everybody, so this actually has been a good pick so far. You kind of moving up a bit. You're in an uptrend. It's not a clear uptrend. It's just kind of moving up. So CVS is something could continue to move higher. You're at $68. Maybe just buying right off this line here. And then China, I'm looking at China. FXI is your China large-cap ETF. And it was in a really great trend move from 29 to about 39, $10 move. And it's come back down here to this fill this window, this rising window here, and might be a good opportunity. The 50 is sloping up very well, and so is the 20 price. So you're positively stacked. The price is in between those. So yep, strategy here could be to buy off the 50, or where's this window end up? Yeah, buying off the window. So yep, we can look at China, we can look at CVS, but I think maybe you just want to stay put unless you have a better sense of this market than me. So good luck out there, and this has been the Candlestick Cash Radar, and we'll keep keeping our eye on the market every single week to see what we're liking. Usually I like to do 3 picks, but just 2 picks this week, and you could view it as 0 picks as well, because I'm not sure if I'm going to be buying anything. So anyway, thanks for watching.